Yeah, I'm losing my.
When should you buy stocks, Pete, is the question that we get hit with constantly. And a big piece of inspiration for this came from my brother, who's a couple years older than me and is just now, he's a very smart guy, but he's very biology oriented. He works at a biotech out in San Francisco. And he calls me yesterday and he's like, so you need to walk me through ETFs and I'm opening a brokerage account and what should I buy and how should I diversify? But the big question at the end of the call, which I think it works for our active traders and our futures traders out there, is he was like, so do I just dump all of the money into the stock market right now?
Yeah.
And I was like, honestly, like maybe you should, because you look at facts like this. If you bought the S&P 500, Pete, any day prior to Thursday of last week, you'd be up money. And this is like something that's funny. Whenever you look to invest, or whenever, I've never bought real estate, but you have at least once, Pete, and I'm sure it's the same conversation with like your spouse or internally, which is like, man, real estate's at all-time highs. I don't feel good about buying this. But guess what? It was at all-time highs last year. It was at all-time highs the year before that and the year before. So it like becomes this like anxiety-inducing question. When should I buy stocks? Well, I don't want to buy the high. But if I didn't buy anytime prior than a couple of days ago, I'm missing out on profits.
Right. And we're contrarian traders, so we're not suggesting that now is the time to tip the iceberg. Sometimes we joke, and I love your brother. He is a good cabernet. There are several of them out there, just to let people know. But you know what? That sense of, and we've talked about this in markets, that sense of always paying too much or selling it too low is always a feeling we've all had. It's part of why we're so disciplined. Before we do that action, we've made some decisions about entry and exit and management of that. And that really helps mitigate that feeling of, and the analogy about the houses, I don't know anybody who hasn't bought a house and hasn't felt like, even when the market has had these dramatic pullbacks, I paid too much. They're all, houses are going to zero. And on the upside, same thing too. I can't buy a 15% rally. No, you could on your way to 25% higher as it is in Florida right now. So
exactly.
It's a good example.
And so this is what I told him. And this is what I think a lot of viewers know, but I want to take it all the way as far from like the last, we're showing here 30 years worth of data. I want to bring this all the way to like our active traders who are trading as closely as like a couple of minutes or a couple of hours. But what I told my brother was like, yes, this might be the high and stocks might reverse 5 or 10%. So you know what you do is you buy some today, you buy some when you see a 5% down move, and you buy some more when you see a 10% down move. And the worst case scenario there is that you miss some of those buys in the future. But there, what you're doing is you're taking all this anxiety that's built up in like, should I buy it right now? What should I do? Everybody's talking about Dogecoin and GameStop. I feel like I'm missing out. I need to buy this stuff right now. And you at least flatten that out. And you're like, I'll buy some right now and I'll buy some later when prices move lower. And that mitigates some of these worries. Now, what's really great about trading futures, Pete, active traders, people like us, is that we take that strategy of, my brother goes to a trading platform for the first time ever with his chunk of change that he's accumulated and is like, today, April 21st, I need to buy everything. And he spread it out. I'll buy some in April, I'll buy some in May. What we do is we take that strategy and we put it on steroids, because we essentially say, I'll buy some this minute, I'll buy some next minute, I'll buy some in an hour from now. And you flatten that decision-making out. You get smaller and you spread it out, and that reduces a ton of the stress. Like I would say, people think that trading futures and actively trading is a more stressful process, but I would almost contend that it's more stressful to pick one date on the calendar and be like, this is when I'm buying stocks.
Right. Absolutely. And that's why we talk a little bit around being able to, whether it's a small future or a stock, being able to buy a couple of units, because part of that process is to be able to enhance our cost basis. The thing is, if you're a 3-lot trader and you're using that advantage to buy one at a time, if you're averaging and the market continues to trade lower, are you reducing your cost basis? You are, but you have to have the realization, if you get filled on all three all three are going to be losers at that particular moment. You got to be comfortable that you would either buy three at once or you're going to layer in. And sometimes you're going to buy one. What I do, and I'm absolutely indifferent about this, if my first one is good, I still like the idea. I'm adding a little bit higher. I'm still doing the same thing I want to do.
Yeah.
Sometimes you get them a little better. Sometimes you don't. But it's this idea of spreading exposure over a little point of time is very important.
Well, and I bring this up because yesterday was one of the first big down days in a while. And I think it incited this feeling in my brother and a lot of other people as well, which is like, do I buy this? And you have this conversation internally, which is like, big down day in the market, but they posted all-time highs on Thursday of last week. So what do I do in the interim? And as you reduce that anxiety, you flatten out your entries from 1 day a year to a couple of days a year to a couple of times per day. And you get small every step of the way, you're getting smaller, and the small exchange products are great for that. Pete, you can take yesterday's occurrence, which was a down day, look at the facts here, which we've looked at several times, which is the probability of stocks moving higher after one down day goes from about 50-50 to almost 60-40. That is a huge jump. And what that tells you, by increasing activity and putting these numbers against your when should I buy stocks question, now I can take advantage of what we're seeing today. Big down day yesterday, and now we've got a 50-cent bounce in the small stocks product, or $50. Now, at the end of the day, is that great for someone like my brother? No, like he doesn't care about a 1% bounce in stocks from one day to the next. But if you do take that question of buying stocks from 1 day a year to looking at it intraday, and you use these statistics, you can get rid of that idea. Like, Pete, if they posted all-time highs on Thursday and you're saying to yourself, well, that's too overvalued, now I can never buy stocks, then you're missing out on half of the trades in equity index futures. And that's what you don't want to do, right?
No, absolutely. And we always talk about it. I never quite want to be in that position. Always will have a bias most days, almost always. I never want to remove one side of the equation completely. And what that means is, sure, I may have a bias on the short side or the long side. But when you pull one off the table, especially for the wrong reasons, you've eliminated half your potential opportunities when you think about that 50-50 world. And that is not a productive, that's not a productive start to strategy before you even address mechanics of management.
Yeah, absolutely. And so let's end here, which is like, when should I buy stocks? Well, if you're not an active trader, then you're probably not watching this program. And so the answer that I give to you is probably not a great one, which is like, you should look at buying stocks potentially every single day. And that's just 50% of your opportunity, because you should also look at selling stocks every single day. And so with that in mind, a lot of people tend to think active traders are more stressed. There's more stress in their lives, when I would actually say there's probably less stress in my life than my brother's, because he has to pick right now. Spring 2021 is the time where he's getting in the equity market, and he's just got to hope it goes up from here. Whereas I can look at the opportunity from yesterday to today, Pete, look at those numbers and say, hey, man, there's 60% likelihood historically that this stock market will bounce after yesterday's big down day. And I can say, I'm going to buy them today, look for that bounce. And if I don't get it, I'm out. You reduce that time frame, you reduce your stress, and just work your way from this big questions. When should I buy stocks? Work it down to a smaller time frame, a smaller stress question, get smaller with the small stocks product. And hey, man, that's an easier question for me to answer.